table. Good evening. If you hear me, you can chat. Okay, yesterday we had reached here. We were to find the NPV. This was the NPV tab. And you can see that we used the PV formula. I'll repeat it again. Equals, we start with a negative PV, comma. Sorry, we press tab. So our rate, you can see we've been asked here rate. So the rate here will be the 15%. So I'll go to 15%. Goes up here. I press comma. You can follow from here. You can see we've been asked the number of period. I see the project had 5 years, so it's 5, comma. So our periodic payments will be our project cash flows after we've done the profit and loss statement. So our project cash flows are these ones here. You press comma, and the future values, we don't have the future values. You also press comma. Then the type, because if we've not been told the type, we always assume the type is at the end of the period. So we'll press 0 and we close our brackets. Control Enter. Sorry, I think I'll F2. So I'm saying this one is our rate, the 15%. The 5-year are the number of periods, and the L21 is our PMT. And because you don't have our future value here, you can press comma or you press 0. It's the same thing. We'll still get the same value. So these ones are the present values. And then we have the cost. So for our cost of investment was the 1500 here. So I'll come here, equals this 1500, this one. So present value minus cost, you find the NPV, isn't it? The NPV tab equals the present values minus the costs. You find that this is now the NPV. Or ratherly, you can use the NPV function itself. So like here, let me unmerge those ones. So it will be equals NPV. You press tab button. So you've been asked the rate is here, the 15%. You press comma. And because our project is going for 5 years, we'll do a 5-year value 1. So our value 1 will be this one. You press comma. Also, this one will be our value 2. You press comma. Also, this one will be our value 3. You also press comma. Also, this one will be our value 4. Press comma. And it also be our value 5. Okay, you close your brackets, then you less the initial investment of 1500. Control Enter. Then I'll change it into cash. You can see it's just the same thing. I'll delete these ones here. It's just the same thing because NPV is present values minus cost. So we'll go to create a sensitivity analysis table. So to create a sensitivity analysis table, we'll use the data table under the data function here, the data bar. You come to what if analysis, then you go to data tables. And for your data tables to work, your data analysis and the solver must be activated. it's the Excel add-ins. So for our data table, because we have been asked about the market size and the rate using the data table. So you can see the market size is here and the rate was the 15% that was up here. So to create a sensitivity analysis table, we will have to estimate the value. So our market size is currently 10,000. I write here 10,000. 1, 2, 3. So our sensitivity, we are measuring it at 1,000 interval, and the interval doesn't matter. So that one will be 11 up to 13. Then it would be this one here equals the 10,000 minus 1,000. Then I'll drag to add more columns at least up to there. Okay, then this one I'll unmerge first. Alt H MC to unmerge. So to make our table dynamic, we must bring in the NPV. So the here equals, we bring in this NPV that we had calculated earlier. This one was the first questions. There, control enter. And then the rate was 15%. So I will minus one each, 14%. Shift. When you want to go up, it's shift and enter. Then 13%, shift enter. Then 12%, shift enter. Then 11%. Then I'll come to 16%, enter, 17%, enter to 18%, isn't it? So I'll select here. I do Alt H BP, Alt H BL for a left border and a top border respectively. Then I'll do this way. Then Alt H BT for an overall thick border that way. Then I'll select my data. Then I go to data. I go to what if analysis, data table. So I've been asked of the raw input. The raw input will be the here. These ones are the raw input. So okay, I'll take this one. I'll not take from here. I'll take from here. So I'll take the 10,000. While the column input, we say the column input are the discount rates. So I'll take 15 and not where I'm taking. I'm not taking from the table that we are creating. I'll take from here. Then I press OK. And there is my table. So just to confirm that the table is correct, our value here was 1638. And you can see maybe I'll do 2 decimal places. I come to home and I do the comma sign here. At 2 decimal places, you can find that at 15% and at 10,000 units. Sorry, I didn't take this into the table. It's the 62. This one is just to confirm if the table is correct. And also, so this one is the sensitivity analysis in Excel. The sensitivity analysis. Sorry, let me see the charts on the Zoom. Someone is telling me to maximize. I'll just do this. Sorry. I'll do this way. Let me try to maximize the screen a little bit. So I'll clear this content. Shift, then I clear the content. I don't know what's happening with this mouse. I don't know what's happening. Okay, let me try to maximize the screen first. I think there you can see, if you can see clearly the sensitivity table. I was saying for sensitivity analysis, we are doing sensitivity analysis on market share, and the discount rate, isn't it? So our market share was 10,000. And our discount rate was 15%. So sensitivity analysis is just analyzing the values around the current price. So if our current market share is 10,000, so we look at 1,000, 1,000 less, and 1,000, 1,000 more. And for the rates, we look at 1% more and 1% less. So that's what I was doing. Here is 10,000 tab. So here it will be equals the 10,000 plus 1,000. So this one is 100 that way. So I'll drag up to 12,000 or 13. Then here it will be the opposite. It will be the 10,000 minus 1,000. It's 9,000. Then I'll drag to 7. There to 7. Then I told you for sensitivity analysis to work, it must be dynamic. So here we will, because we are doing the NPV sensitivity analysis, so we will link the NPV. So our NPV here, and make sure you are taking it from the cell it is. So you see that our NPV, we found our NPV to be 1638 here. We take this one here, and then we press F4, Control Enter. Then for our rates are 15%. So we look for the rates lower than 15% and rates above 15%. So I can start at 12%, press tab, 13%, press tab, 14%, press enter, 15%, press enter, 16%, 17%, and also 18%. After that, I'll select the data in here. I do Alt HBP for a top border and Alt HBL for a left border. Then I'll come and select the whole data here. Then I do Alt HBT for an overall thick border that way, just to make my work look clean. So I'll come now, I'll select the whole data. Remember, you must also select the NPV that we found out here, isn't it? We select from there. Then you select the whole data. I don't know why my mouse. So I'll come here. Then I'll select the whole data this way. Then after selecting the data, I'll go to data. Then I'll go to what if analysis. I'll go to data table. So for the raw input, you have to input the main row, not this one here. So the one that we used to calculate, it's up here. That's why I said the thing must be dynamic. So our market size, we will take this one here. And for the column input, which are the discount rates, we will take the 15% here. Then we press OK. Then we press Control Backspace to jump to the active cell. So I'll change this into, they're in percentages. I'll change it into cash. So I'll come. Then at home, I change them into shillings, isn't it? So I told you to confirm your table. You confirm the value that we used to calculate. We used at 10 and 15%. You confirm from there, and you find that. So this one is just to show you that the table is correct, isn't it? So we can add some things like conditional formatting. So we can go here. We first select the data. So we want to know the values that are below and the values that are above our current production, isn't it? or our current NPV. So we go to conditional formatting, we go to highlight cell rules, we go to greater than. So it was 16. So I'll write the value here. It was 1638.62. Okay, and I like to fill them with green because these ones are the above, because this one is greater than. So this one is actually greater than what we are currently, isn't it? Okay, then I'll select again the data. I go to conditional formatting. I go to highlight, so I'll go to less than. So for the less than, anything that will be less than our current, which is 1638.62, 1638.62. Okay, so you can see that the above ones are above, so we can, maybe we wanted to see NPV, sensitivity of NPV against, maybe say at if we had a market share of 1,000, of 11,000, and our rate was 16%, you can find that our NPV increased from the previous one of 1638. That is sensitivity analysis. So that one was a very simple one. So we will go forward, and so we will also look at another sensitivity analysis. So it's part 2 of the I think this one was in the mock. It's also a sensitivity analysis table. So Frederick Macharia is contemplating to start a new business as a retailer of a specific mobile phone brand called Wiko Phones. You've been provided with the following forecasted information regarding the phone as follows. You've been given the price per unit, the expected unit sales, the cost per unit, the fixed costs, which include the salaries of 5 employees each, and the rent. You are required to prepare a pro forma income statement for Frederick Macharia, hence determine the forecasted operating profit. So a pro forma income statement is like a forecast. So in short, you have been asked to prepare a forecast. So this one will be a very simple one. So it's the Frederick Macharia. Pro forma income statement. So this is the same, it's just the same sensitivity analysis. Actually, I'll do like 3 examples, then you can work on the rest. So our revenue. So our revenue here will be our price per unit times the expected unit sales, isn't it? And I'll do it in so that easily I can see it easily. So to the variable cost will be equals to our cost per unit times, so I'll put in a negative, times the unit sold, so that it comes as a negative there. So we'll go to our gross profits. It will be, now I press Alt equals, then Control Enter, Control Bolt, Alt HBP for a top border. Then we'll go to our fixed costs. Our fixed costs. Under our fixed costs, we have our salaries. So the salaries were to 3,400 times 5, because there are 5 employees. Then rent tab. So our rent will be this one here. And because it's an expense, I like to enter it as a negative. Also for the salaries, because we'll be paying out, I like to enter it as a negative. Then we'll get our operating profit tab, Alt equals, then I'll move up. I press Shift, then I press the down arrows, Control Enter, Control Bolt, Alt HBP for a top board. So that one is a simple pro forma income statement. So you can see that part 2 of the question says, perform a sensitivity analysis on the forecasted operating profit under the following pairs. Note, use appropriate conditional formatting to highlight outliers and the perfect combination. So the first one is the selling price per unit and the quantity sold. So on top here, we will place the selling price per unit, and you can see our selling price per unit was 7,999. So for sensitivity analysis, you can start for 7,999 tab 899, and it doesn't matter. They don't have to be the interval. The interval doesn't have to be the same. You can it can be even here 5,000. The interval doesn't have to be the same, but here you must link the operating profit. You link it directly, and remember that here I'm not hard typing it in. If you can see the revenue here, it's the sale, because when we come to do sensitivity analysis, actually for the table we'll select from here. So the multiplications here must not be hard typed in. You link the cell. Even if you check for the variable cost, I've just linked the cell. Maybe only for the salaries, the 5, but you can see I've linked the cell because the 5 were here, but the cells must be linked. And the next thing is the quantity sold. You can see the quantity sold was 1,500. So I can do from 900 to 1,000 to 12,000. I told you they to 1,200 to 15 to 17. The interval doesn't have to be the same to 1,800. It's just the same thing as we have done earlier. So here it will be Alt HBP, Alt HBL for a left and top border. Then I'll do Alt HBT. Okay, I've already selected the data while I was creating the table. So I'll just go directly to data, then what if analysis, then I'll go to data table. So here the raw input, don't input from here. That's why I told you we were linking the sales. So for the raw input, it is the price per unit sold. So you link it from there. And the column input is the expected unit sales. You link them from there. Then you press OK. So just to confirm, we were selling at 799 and 1,500. You can see that it's there. It shows that our data table is correct. If you get a different value, it will mean that the data table is not correct, isn't it? So that is what if analysis. So I'll repeat again, I'll repeat again for the selling price and the variable cost. And I think we will be good to go to another things. Maybe we will talk about scenario analysis and forecasting for today. So I'll copy, Control-C, Control-V. Then I'll link this one to the operating profit. You must link. Then the variable cost per unit. You can see our variable cost per unit here. It was the cost per unit, it was 4,800. So we can start maybe from 4,000 to 45,000 to 4,500 to 48, because the 48 must be in, because it's what we are looking to, 5,000 to 6,000. Yes, that way. Then I just select the data. Then you go to data, what if analysis, data table. Remember, here is where the trick comes in. You must input from here. So this one is the price column, and this one is the variable cost column, and we press OK. It's just as simple as that. So that is sensitivity analysis, and can also be performed on loan items. So you just check to make sure the table is correct. And I also, for the first example, I showed you how you apply conditional formatting. You just select the data, then you head here to conditional formatting, highlight cell rules, the greater than, So it was 48, 40, 40, 88, 500. I'll fill them with a green text. I do okay. So the ones in green are showing amounts that are above what we are currently, what our forecasted operating profit is. So we may decide maybe let's sell 4,000 units. We'll reduce the number of units that we sell, but we increase the price. We'll still be making more. I think you get that one. So that is sensitivity analysis. Maybe at your own time, you can decide to attempt the others because it's just the same concept. The concept is the same. The concept is the same. So let's move to scenario analysis, so that when we move to forecast, there's no big problem at all. So you are the management accountant in a manufacturing firm. Your CFO has requested you to prepare a profit and loss for the products M-Darasa for the month of February 2023, given the following data. You've been given the unit sold, the price, the variable cost. Part B, based on different market dynamics, your CFO would wish to analyze the profit of the firm under different levels of output based on the maximum production that the company can produce and sell products M-Darasa. The following are provided for your analysis. So there you've been given the scenarios. This one is scenario analysis. The first two are sensitivity analysis. So you've been asked to prepare a detailed outcome under each scenario given above on the following: the sales revenue, the variable cost, the contribution, and the fixed cost. Then there is a proposal of introducing a new product. Maybe let's work on the first two. So the first question was to prepare a profit and loss, the same way we have been preparing in the previous two lessons. So profit and loss, two questions, I mean, profit or loss. So our revenue equal to the unit sold times, and remember I'm taking from here, I'm not writing just 60, or I'm just taking from the cell. Control enter. Our variable cost will be, I'll start with a negative, so it will be this one times our unit sold of 5,000. Then our fixed cost, so our gross profit first, alt equals, control enter, control bolt. Then we come to our fixed cost. Tab, our fixed cost was 100,000. So we come to our operating profit. So I'll press alt equals, I move up, I press shift, I move down, control enter, control bolt. So this one is minus. Sorry, this one is minus equals. So it will be this one minus the 100 there, control enter. And you can see that we are making a 0. So that's it. It's just, you may decide to arrange it so it looks a little bit more cleaner. Isn't it Alt HBP? So we'll go to scenario analysis now. The scenario analysis. So part B of the question says that based on different market dynamics, your CFO would also wish to analyze the profit of the firm under different levels of output based on the maximum production that the company can produce and sell product M-Darasa. The following scenario. So you've been given the units, and you are told to to perform a scenario analysis. So for a scenario analysis, you can use here under data table, under what if analysis, you can use the scenario manager, but the scenario manager, the problem with scenario manager is that the scenario manager does not give out a detailed outcome. So instead of using the scenario manager, we'll use the choose function. So I'll come here, I create, I write choose, then I do this way. Tab. After I come to this box, I go to data. After going to data, I go to data validation. Data validation is here. I'll press V, then I'll go to data validation. When I come to data validation here, I'll be asked of a list. So I'll come here and I select on list. Then I'll have one. So for one here, it will be the scenario one here. Press comma. 2 for scenario 2, press comma. 3 for scenario 3, I press comma. 4 for scenario 4, I press comma. 5 for scenario 5, I press comma, and then 6 because the scenarios will be 6. Then I press OK. So you can see here it's a dynamic, something dynamic. So you've been required prepare a detailed outcome under the scenarios given above on the following. So we'll be looking for the revenue. It's same like an income statement. Shift the revenue tab, the total variable cost, then the contribution. So the contribution is like the gross profit, then the fixed cost, also then the profit. These ones I'm removing them from here. From here, the required one, what we are required to prepare. So also for the profit, and also for the total cost. For the total cost, I'll skip one line there. Total cost, because total cost is the fixed cost plus the variable cost. So I'll come here to revenue. I press OK. I press equal signs to initiate the formula. So these ones are the production units, but the price will remain constant. So I'll take the price here, I multiply by, and then here now is where I introduce the choose function. Then I go choose, I press tab. So our column index is what our data validation here is, our column index here. So I'll take that one and I press F4, I press comma. So our value one will be this value here. I press F4, I press comma because I don't want them to move. This one will be our value 2, comma. Then this one will be our value 3. I press F4, press comma. You can see from here as we go. So this one will be our value 4, press comma. This one here will be our value 5, press comma. Then this one here will be our value 6, and I'll not press comma. Now I'll close the bracket. Then I do Control Enter, isn't it? So, for example, here we had 5,000 units. If you change a scenario here, let's say we are at scenario 1, you see it's 600. So the 600 is the 10,000 times the 60, isn't it? If you go to scenario 6 here, let me widen. It's 1,200. So million, 1.2 million. So it will be the 20,000 times 60. You see now how the scenario is coming. So we'll go to the variable cost and we will repeat the same thing. So the variable cost per unit, we take this one, press F4, multiply by, then choose function, choose, press tab. So our column index will remain. So this one will be our column index again, comma. Our first value, comma. We press F4 to lock, comma. Our second value, comma, our third value, comma, our fourth value, comma, our fifth value, comma, then our sixth value. I close the brackets. Sorry, control enter. So that is our, we are now creating a sensitivity table for a scenario table, because sensitivity, the difference between scenario and sensitivity are not given the precise units that they want you to find the sensitivity of. But for scenario, like here, we've been told for 12,000, 14, 16, that way. So you can just confirm from my one, it's 400. So it's the 10,000 times 40, because one was scenario one. So contribution will be equals to this one minus the variable cost. Control enter, control bolt, Alt HB, P for a top border, isn't it? Then we go to our fixed cost equal. So our fixed cost will remain constant. That's why they are called fixed cost. So we shall just take them from there. And our profit now will be equal signs, the 200 minus the 100. Control enter, control bolt, Alt HBU, isn't it? So for our total cost here equals, our total cost will be the variable cost plus the fixed cost, isn't it? Control enter. So if we change our scenario, maybe we look at scenario 6. You can see at scenario 6, we'll be making a profit of 300,000. And this one is at least more realistic, because at one, we're making of 500. This is because you find that the variable cost also increases as the number of units we produce increase. You can see the contribution at scenario 6 is 400,000, and at scenario 1 it's 200. So actually, this is the sensitivity analysis. I just wanted you to grasp the concept, because I think we'll be working on some questions on that require scenario and sensitivity analysis. So we'll go to part C of the question. There is a proposal of introducing a new product branded Make Connect with the aim of diversifying the company operation. The product is estimated to retail at shillings 450 per unit, while the variable cost will be 300 per unit, and the fixed cost is 400,000. Using the above information, prepare a break-even point. So this one is for the ones clearly showing the break-even points in units and the value of the product. So here, we can use the goal seek function, and this one is for people who are doing management accounting, because the break-even analysis is under management accounting. And the next question is, what is the level of production should the firm to attain to achieve a target of a profit of 1,000? So we shall create a small income statement, our revenue, isn't it? Then our variable cost, then our contribution, then our fixed cost, then our operating profit. So we are looking for the break even in units. So here we shall create a small table, units sold, and we assume that the units are down here, isn't it? So for our revenue will be equals the 450 times our unit sold. I told you, assume our units are here. It will give you 0, no problem. Then we go to our variable cost. Our variable cost will be the 350, this one here, 350. We multiply by a negative of our units sold here, control enter. Then our contribution will be the summation of the two, Control enter, control bolt, Alt HBP for our top border. So our fixed cost will be the 100,000, the 400, it's here, 400,000, 400, and I start with a negative 1, 2, 3. Then our operating profit will be the sum from the contribution plus the fixed cost, because it's a negative, control bolt, isn't it? So here is where now we go to, you've been asked using prepare the break-even point. So at break-even point, the operating profit is equal to 0, isn't it? So here we'll go to data, then to what if analysis, then to goal seek. So we want to set sales. So this operating profit, we are setting it, this one. And the value we want is 0, because at break-even point, total revenue is equal to total cost, isn't it? So by changing, and we will be changing our units sold here. The sale that I told you, we assume it for units sold. Then we press OK. So you can see that at break-even point, we'll be selling 4,000 units. 4,000 units, isn't it? Then this one it was just an example. It was more on sensitivity analysis rather than break-even analysis. So we will not create a chart now. This one is just to show you to use the goal seek function, because today's class had been set more on goal seek, on scenario and sensitivity analysis, and also we'll talk about the forecast. Okay, if you have a question, you can ask, because I've seen so many questions on the chat. Let me pass through some. Okay, the one who says that we currently we share the material. I'll share it immediately after the class. And then the one who's saying that I repeat this question. Do you mean the whole question, or where do I start from? Okay, this video actually is not recorded, or maybe it's recorded by the management. I'll have to inquire if you want to share the video. Yes, I'll show you how to create a break-even point chart. Don't worry, but let's focus on today. Today we are doing sensitivity, scenario analysis, and a little bit more of forecasting. We have already taken 1 hour, but these two are at least the main questions. You can see on this one here. This one here we wanted to. It's more of, it incorporates both the sensitivity and forecast, scenario and forecast. So that's why I started. You can see even it's named scenario and forecast. So we wanted to grasp something on scenario and forecast before. Sorry, the one who said I'm too fast. Where are you? Okay. So at 1,000 units, it will be just the same thing. It will be just, so we will just go to data, then we go to what if analysis, then goal seek. So this one is the sale that we'll be setting, and we want it to be at 1 million, 1, 2, 1, 2, 1, 2. By changing the sale, we will be changing the unit sold here, this sale here, then we press OK. So let me, I had forgotten to connect the charger. Let me connect. Just a minute. Holy shit. Okay, I've already connected the charger. So for us to make an operating profit of 1 million, we'll have to sell 14,000 units. Today's topic was more about goal what if analysis. So we'll go to the next question, because it's 1 hour ago. And this one I will take. This one was in the previous December 2022 examination. It was touching on forecast and also scenario analysis. So I'll just show you how to do it so that, and if I'm fast, you can just, maybe you chat on the chat link. And someone is asking on data validation, about choose and data validation. So here under this question, we will be using the same. We'll be talking about choose and data validation. So don't worry. So the question, you've seen the question, it's a profit and loss statement for Sepetuka Limited. So you've been asked of to calculate the following and interpret the following ratio: the annual growth rate. So we will, so here it will be the growth rate, the growth rates. So, and for the years now, for the years from 2020, tab 2021, tab then 2022. This is just like revision. We are just revising for as we prepare Alt-HBH for a bottom thick border that way. Then you can select the cell and you press Shift space, then Shift Control plus to add at least some cells so that it doesn't be so pressed. Control V, this one comes here. So for our growth rate in 2020 to be equal signs, then you come for, so for 2020, we'll open brackets, then we take the 64 minus the 54, we close our brackets, we divide by the previous, the 54, isn't it? Control Enter. You can see that that one is 20%. Then I'll just drag along. Then the next part, those ones are the Control Shift plus to add some spaces. So the CAG, the cumulative average growth rate, is the, like cumulative is just additions. So the CAG, so our CAG will be equals, then average, you type average, you press tab, then you select the, because it's for the 3 years. So it's 2022, 2021, and 2020. Control Enter, Control Bolt. Then maybe I can add 2 decimal places. Just see where I'm standing. Okay, then we go to Shift space. So we are going to the tax rate for the period. And this one is just the same thing. So for the period from 2019, so Control Bolt, 2019, tab, 2020, Control Bolt this one. Then I select the 2. Then I drag up to 2022. I'll do Alt-HBH for a thick bottom border that way. So equals, equal signs. I go to the statement of profit or loss. So because our income tax expense here has started with a negative, I also start with a negative. Then I select it over. Our income tax expenses is over profit before tax, isn't it? Over that one there, Control Enter, Control Backspace to jump to the active cell, then a percentage, then I'll add 2 decimal places. I drag along. So you can see that the effective tax period was 30 all through, isn't it? Now we'll go to the main part of the question. That one was like introduction. So here it is. Now assume the following for Sepetuka Limited. Part 1, revenue growth rates are forecasted under 3 scenarios, namely the base case, the optimistic case, and the pessimistic case. The base case growth rate for the first year of the forecast is the 2022 CAG, this one that we found here, the 21%. This is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15%. The optimistic case is 20% above the base case, and the pessimistic case is 10% below the base case in all forecast periods. So we shall first create the assumptions. First, we can't create we can't create without the assumptions. So I'll come here and I do control bolt, then assumptions. Our assumptions. So the first thing is the revenue growth rates. So I'll skip so you've been requested here down to prepare a 5-year forecast from the year 2023 to 2027. So I'll come to write the years, control bolt, 2023, tab, control bolt, 2024. Then I'll select the 2, then to 2025, 2026, and 2027, isn't it? Alt HBH for our bottom thick border. So our first additional information is the revenue growth rate. And if you want maybe to add a column, as I've selected that way, I press control space, sorry, because some are merged, we will not add this here, but I wanted. So the revenue growth rate, some cells are merged. That's why when we add, it will add the whole thing. Revenue growth rate. So for 2023, you've been told is the CAG of 2022, isn't it? This one here. Control enter. And this is expected to reduce by 2% annually until the last year of the forecast. So we shall come here to 2024, equal sign, and we bring in a max function, max. You press tab. So our first number will be this one minus the 2%, isn't it? 2% that will be reducing. You press comma, then it will be reducing up to 50, then to 50%, isn't it? You close your brackets, you do control enter. Sorry. I'll remove the percentage here. I don't know why. So equals max. So I'll come to max. Then our first number is this one here, minus 2%. I don't know why it's. Then I press comma to 50%. I close the brackets, control enter. I don't know why it's bringing that way. Okay, I'll do control Z, control Z. So the thing here is that maybe the formula is not working. So let's do how it is. They're saying that it will reduce 2% annually until the last year of the forecast, subject to a minimum of 15%. So it won't go below 15%, isn't it? So here, minus 2, it will be 19%. Then there it will be 17%, isn't it? For 2026, it will be minus 2, 17 minus 2, it will be 15%. But for 2027, it will be 15% because it is subject to a minimum of 15%. When it reaches the 15%, it won't go further down, isn't it? Okay, then let's continue from here. The optimistic case is 20% above the case, and while the pessimistic case is, so we shall come to the base case first. So these are our assumption of the base case. So revenue. So our revenue, how we'll be getting our revenue tab. So here we have the base case. So our base case will be, because for our revenue is increasing, isn't it? So for 2023, it will be the revenue of 2022 up here, this one. We multiply by, you open your bracket, 1 plus the growth rate, isn't it? And the growth rate is up here. is the 21% here. You close your brackets, control enter. Then you come to 2019, it will be the one for 2023 plus, sorry. Equal, it will be the 2023 plus, you open your bracket, 1 plus the 19, you close your bracket, control enter. Then because I'll make it in cash, also this one. Okay, so this will be our revenue will be growing, isn't it? Then I just drag along. So these are our revenue. So we are told the optimistic case here, optimistic is 20% above. So it will be 1.2, like 120%, isn't it? And the pessimistic is 10% below, so it will be 0.9, isn't it? That one is interpretation of the first additional information. We'll go to the second one here. So the gross profit margin here, gross profit margin. So tab. So we've been told the gross profit margin for the first year of the forecast is the 3-year average from the period of 2020 to 2022. We come here, select here, we will add another field. So I'll press shift space, then shift control plus. Then I'll come to do the gross profit margin. So tab, so gross profit margin will be our gross profit here divided by our sales, isn't it? That way, then I'll change it into percentage. So for the years there, isn't it? And we've been told that so we'll go back to we've been told the gross profit margin for the first year of the forecast is the 3-year average. So we are on the first year of the forecast, 2023 here. It will be the 3-year average from 2020. So equals average. We press tab. So so we will select our gross profits margin here. So from 2020, this started from 2019. So we start from here, shift, then F4, then enter. Isn't it? And I'll do 2 decimal places so that we really know where it is, isn't it? And I've been told that this is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 50. So minus 2, it will be 54.67%, tab to 52.67%, tab to 50.67%, tab. So the last one will be 50 because it cannot go below 50. So it will be 50.00%, not 0.56, because it cannot go below the, let me remove the max part here. It cannot go below 50%, as the question is saying, isn't it? So we go to the part 3. Operating expenses ratio are modeled as a 3-year average from the period of 2020 to 2022. These are assumed to remain constant. So here, operating expense ratios, operating expenses. So our operating expenses will be our operating expense divided by our sales. So we'll come here, operating expense ratios, tab, equals, so our operating expense ratios will be come here. Our operating expenses are here because they are started with a negative. I'll start with a negative, then I take divide by our sales, isn't it? Control enter. Then I'll do percentage. I drag along. So I'll maybe increase the decimals again. Okay. Well, they are here. So the question is saying they are modeled as a 3-year average, the same thing, equals. So I'll go back. So from 2020, so I'll take from there. Then I had forgotten, so I can adjust from up here in the formula bar here. Then I'll do average. I press tab. I come to close my brackets, control enter, control backspace to jump to the active sales. And we've been told that this one will remain constant, and it's assumed to remain constant over the forecast period. So there's no need of dragging it along because it remains constant, isn't it? We go to depreciation. Depreciation to revenue is assumed to remain constant is assumed to remain constant as the 3-year average. So also it's the same thing. So depreciation to revenue equals, so I start with a negative because it's an expense. So it's this one here, divide by our sales, isn't it? Then let me do percentage and I add 2 decimal places. Then I just drag along. So this one are assumed to remain as a depreciation equals average because they are remaining as a 3-year average. So from 2020 here, sorry, I thought I had started with, okay, equals average. I press tab and I go back to take them. Control enter, control backspace to jump to the active state. And we've been told that this one will remain constant also. So the finance cost, so we'll talk of finance cost. Finance cost. So the finance cost are expected to reduce steadily as the loans are repaid. Use the reduction rate in the year 2022 of the forecast. Let me see, let me check on the charts. Okay, the minimum of 15. Yes, it was a minimum of 15. Sorry, let me wrap this one. Or what was the question? Yes, yeah, it was a minimum of 15, and this second one was at a minimum of 50, the gross profit. Okay, someone is saying that I'm too fast. I don't know how. Okay, I'll just go back. The first part says revenue growth rates are forecasted under 3 scenarios, namely the best case, optimistic case, and the pessimistic case. The best case growth rate for the first year is the CAGR of 2022, which is 21%. This 21% we had calculated here the 21%, the 3-year cumulative average growth rate, this 21%. And we've been told this one is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15%. So as it will be reducing to 19, to 17, you see it's -2 to 15, but it's subject to a minimum of 15. So it can't reduce below 15. So it will remain at 15. And this one, so our revenue, this revenue here, for 2023, we'll take the revenue of 2022 times 1 plus the growth rate in 2023. For 2024, the revenue in 2023 times 1 plus the growth rate in 2024. That way, up to the last year of the forecast. We come to the optimistic case is 20% above. The pessimistic case is 10% below. So the base case, maybe here is where you didn't see the base case. The base case will be like 1 or 100%, isn't it? Let me put them in the middle there. And then the gross profit margin. So gross profit margin is sales over gross profit over sales. We calculated here. We are calculating here. This one, you can see it is E10 over E8. So if you look, this one is the E10 over E8. So gross profit over sales. So we found our gross profit. Then they said it's a 3-year average. So we took the average of 2020, 2021, and 2022 to arrive at this figure of 56.67, isn't it? And we've been told here, this is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 50%. So this one is the first year of the forecast. It reduces by 2% to 54. It reduces by 2% to 52. It reduces by 2% to 50. And it reduces to 50 because it has a subject minimum of 50, isn't it? We went to operating expenses. Our operating expenses, let me be conversant also with the Zoom. I'm saying here it will be equals what was in. We multiply by, you open your bracket 1, shift plus what was in there. You close your brackets, control enter. Sorry, maybe I never dragged along. So you see, I'm not locking anything so that when I drag along, it moves. I can move this way. You can see if I click on this cell, it will be 2026 times 1 plus 2027, the 15%. I think that's where there was a problem. Escape. Even if you click to 2026, it will be 2025 plus the growth rate in 2026. I'll press escape. I see the screen. The screen has disappeared. Okay. Let me zoom out a little bit because I see it's very small. I think you are seeing how now this is, isn't it? It's 2024. The first one here, it's H8. H8 are the sales of 2022. You can just confirm from here. They are the sales of 2022, these ones, the ones that are selected. So plus, you can check from the formula bar here. So these sales multiply into bracket 1 plus the growth rate, which you are told for 2023, it will be the CAGR of the 3-year average, cumulative average of from 2020 to 2022, isn't it? Control backspace to jump to the active cell. Then I'll do escape. So we are here. Okay, for the finance costs, you've been told finance costs are expected to reduce steadily as the loans are repaid. Use the reduction rate in the year 2022 over the forecast period. So it will be this one equals. So we'll go to our income statement. Let me reduce this a little bit. I go to the income statement, then I come back. So let me look for the income statement. Just a little bit. So here are the finance costs. Here are the finance costs. You can see they reduced to 8,000, isn't it? So I'll take this one, divide by the previous -1, isn't it? Control enter, control backspace to jump to the active cell. Then I do percentage, then I do 2 decimal places. You can see now we have already done also for the finance cost, isn't it? And the income, so the income tax expense, our income tax expense will be 30% as we had calculated earlier above, isn't it? So now we are reached to required. We have to prepare the forecast, a 5-year forecast statement of profit and loss for Sepetuka Limited for the years there. So I can come here and I copy the years. So Control C. I'll come here, Control V, then up. So this one is a statement of profit and loss. Control enter. Then it's for Alt HMC to unmerge the cell first. Then it's for Sepetuka Limited. Control enter. Alt HMC to merge. Shift, then I select, then Alt HMC to merge. So, and because we will be creating something dynamic, I'll come and select the cells, Shift plus. Isn't it? So here is where I'll introduce choose. I press tab. Under here, I go to data. Under data, I go to data validation. You can see, you can follow from up here. Under data validation, I'll go to list. So because we only have 3 scenarios, we'll have the one for scenario 1, comma, scenario 2, comma, scenario 3. And then there's nothing else here. The one who said that I should repeat on data validation, just that way after we finished. Okay, the screen I had increased it, but it was giving me hard time if I use a larger screen. So after I've done that way, you can see that there's already brought in the data validation. As data validation is just used to make it that there's no other value that will enter. For example, here, if I write 4, it will refuse. So that is the essence of data validation, because there are only 3 scenarios, isn't it? Yeah. So we'll go straight forward and to prepare our forecasted income statement. And because the forecasted income statement will be more or less similar to what you are provided here, I'll not be writing the values again. So I'll press on Shift here. Sorry. Up to here. Control C. Then I'll come here. Control V. Sorry, there are some merged cells. I'll go to home and do unmerge. Then I'll go back to copy again because the copy part has already gone. So Shift, Control C. Control V. Isn't it? I want this to be a little bit upper. So I'll do Control X here, then Control V. Sorry for that. So we come now to create our pro forma. This one is a forecasted income statement. You may correct here. F2 to edit the cell forecasted. Sorry. Forecasted statement of profits and loss, isn't it? So for here, it will be equals. So I'll go back to our assumptions list. Sorry, when the screen is big, it becomes more. So you can see that we have three scenarios. So I've already started with equal sign. So I'll take our revenue here. Remember this, our revenue here. Our revenue here is like the base case because we just multiplied these ones here. You are told we multiplied times this one here, isn't it? So, or rather, I can start with choose. I press tab. So after choose, here I'll be asked the column index. So let me jump to the active cell here. So the column index will be our choose button here, our scenario button. I press F4, comma, isn't it? Then our value one will be like just how it's arranged. So our value one will be our base case. So it can be our revenue. And note that I'm locking only 45. I'm locking 45 so that let me lock again. I'm not locking K. I'm only locking 45 so that it doesn't move to 46, but it can move to L, isn't it? So it will be that one. Sorry. This one here. We multiply by our base case. Because the first one is our base case, isn't it? Times one, of which is the same thing. But this one I'm locking fully because I don't want it to move on anywhere. So for our second one will be our pessimistic case. So it should be just this one. That's why I was saying actually we can do this way. Instead of that one will be like, for each one we'll be multiplying the same times 2. We can do this way, equal sign, isn't it? We take this value here, isn't it? And then we lock 45 alone, sorry. F4, we lock 45 alone. We multiply by, now we introduce choose. We press tab. Our column index, this one is our column index here. I press F4, comma. So our value one will be this one here. Then I press F4 because I want it to be locked fully, comma. Our value two will be our optimistic case, isn't it? Then I press F4, comma. Our value 3 will be our pessimistic now, our pessimistic case, this one here. And I press F4. Then I close my brackets, Control Enter. Then I'll change into the ones there. So just to show you, our value 1 was our normal case. So you can see the value is just the same here. It is the 11. So I'll drag this along up to 20. So you can confirm from your values here, 115, 137, 161 to how much? To 185. You can see that the base case, actually, this is the base case, because they say that the optimistic case is 120 above the base case, and the pessimistic case is 90% below the base case. So I think let me just again reduce a little bit so that it's visible clearly on a wider screen. You can see these values are just the same values up here. But when I change my scenario here, let me say I put scenario 2, of which scenario 2 here I've indicated is the optimistic case. So it must be above. Even if you look at these cells will be above this one by 120%. It will be above by 20%. When you go to scenario 3, which is the pessimistic case, it's below. Because it's 90%, it will be below the 115, 90% below that one, isn't it? And then everything else is just the way it is. So we go to gross profit here equals. So our gross profit we will take from our assumptions, because we have already calculated our assumptions, isn't it? We will take this one times our sales, isn't it? And this one, the gross profit, this one, if I lock, I'll be locking only 50 because I want it to move to L, I want it to move to M. Then the upper one I'll not lock. Then let me do in this way. And then I drag along. So when you come to like 2027, if I click in, you can see that it is the gross profit, the sales of 2027 times the gross profit that we had calculated, isn't it? To press escape. Even if for 2026, it is the 50 point, this one, times the sales of the specific year, isn't it? So our cost of sale will be our gross profit minus our sales. Control enter. Isn't it? So even if I change my scenario, let me put to scenario 1 because it's the base case. You can see the values will change, all of them, because it's linked dynamically. Okay, let's go to operating expenses equals. You are told that the operating expenses will remain constant throughout the forecast period. So I'll take the 19.10%, this one here. I start with a negative sign. Okay, I start with a negative sign. Let me see, let me check on the charts. I don't know why people are saying that but this forecasting is very simple. Like you see, I've started with a negative. Maybe if you had much time, so I started with a negative sign. So this one here, then I press F4 to fully lock it, isn't it? So that it doesn't move. F4, when you lock with a dollar sign, I think this you know. When you lock with a dollar sign, it doesn't move to another cell, isn't it? We multiply by, because our operating expenses, we were dividing by our sales. So you are getting operating expenses over sales. We multiply by the sales of the forecast. The above here, control enter. Then let me change in values. So it comes in as a negative, which is correct. Then I'll go to operating profit first. Then so alt equals, and I'm adding from the gross profit. So shift down arrow, control enter, control bolt, alt HBP for a top border. Let me drag these two so that I show you how the F4 is working. Isn't it? After I've dragged that, you can confirm even from the 2027 one. You can see, because it remains constant, that's why we used F4. It remains constant, it doesn't change, but the cells will be changing. The cells will be changing, isn't it? So we go to depreciation. Depreciation also, you had been provided with it here. Okay, let me check on the, and maybe I think there are some videos that you were sent on WhatsApp. So actually, the one who's saying that I should share the videos, I think you have not watched them, because there are also this question. I think it is in one of the videos that we shared, the YouTube videos. Maybe if I'm too fast, or maybe the video is on private, I'll check and I'll liaise with you, and we shall see how you can get the video on the class. Okay. Okay, the Excel file I'll be sharing immediately after we finish the class. Okay, let's go to depreciation. Here to depreciation here equals, and depreciation also we did it as depreciation over sale. So I'll start with a negative sign because we entered it as a positive there. And I press F4 to fully lock it. Then I multiply by the sales. Isn't it? Then control enter. I drag control bolt to unbolt. Isn't it? Then I'll go here to the profit. So this one will be alt equals. Then I move up, I press shift, move down, control enter, control bolt, alt HBP for a top border. Isn't it? Then I'll have to drag that way. Then we go to finance cost here. Finance cost, someone told me to repeat on finance cost. Before I do that, let me repeat on finance cost here. You've been told finance costs are expected to reduce steadily as the loans are repaid. Use the reduction rate in the year 2022 over the forecast period. So the reduction rate in the year 2022 equals, so we go to our income statement. Sorry, excuse me. So our current divided by our previous minus 1. That's what I did, control enter, control backspace. So that is the reduction rate. As in it is reducing with that amount. So for 2022, let me bring the 2022 table there. Control C. So let me put 2022 here, some control V. Isn't it? So these are the finance costs. The reduction rate is the 11.1%. So for our finance cost for our forecast, we'll take this one here. We multiply by, you open your brackets, 1. So because this one is minus, so I'll do plus this one here. Isn't it? Then I close my bracket, enter. Then I'll do 2 decimal places. Isn't it? And because here, when I drag, here I cannot drag. Here I cannot drag, because if I drag, it will be 0. You see? It will be no value because there is no value here. So here again, I'll repeat equals. So the previous, we multiply by, you open your bracket, 1 plus, because I'm adding because it's a negative, so plus this one, and this one I'm fully locking it, and I close because I want to drag, then I do Control Enter, then I just have to drag along. Isn't it that way? Control Bolt. We'll go to profit before tax. So Alt equals Shift down arrow, Control Enter, Control Bolt, Alt HBP for a top border, drag along. So for income tax expense, I start with I take here. I press F4 because it's 30. We multiply by the 35. Okay, I'll be repeating on the validation again, then the list function. Then I do Control Enter. Then I'll drag around because it's just the tax. Maybe I can do even profit after tax equals. So here it will be Alt equals, Alt equals. Then I move up, press Shift, I move down, Control Enter, Control Bolt. Then sorry, and I forgot to drag also this one. So I'll drag it also along. And now that is it. You can see, if I change to scenario 3, which is the pessimistic, we shall be making, for the first year of the forecast, we'll be making a profit after tax of 21,642. And for scenario 2, which is the optimistic one, we'll be making 30,515. And for scenario 1, which is the base case, we'll be making 24. I think maybe we have like, let me check on this one if it had some scenario. Well, it's had no scenario. So let me repeat on the choose function here and data validation. So data validation, let's talk here. Data validation. Data validation is just making sure that there's no data that it has no big deal. It's just making sure that there's no data that enters here. So for data validation, you go here to data. You can follow my cursor. I'm using the cursor. Then you go to data validation here. Then you go to data validation. So here you'll be asked allow. What do you want to allow in that specific cell? So me, I want a list. I don't want a whole number. I don't want a decimal. If you just select a whole number, so it will be only that number. So me, I want a list, isn't it? This list can be anything. Can be A for scenario A, comma, can be B for scenario 2, comma, and can be C for scenario 3. I press OK. So the data validation will be just there. You can see that way. If I try to enter another value, maybe let's say D, it won't. You see, the value of entered is not valid. A user has restricted the value. So that is just data validation. It makes, so because there are only 3 scenarios, we don't want a situation where maybe you have not validated the data that should enter in that cell. Someone writes scenario 4 and there is no scenario 4. You see, it will give no results to this table, isn't it? Any question can be asked via the chat. Is the screen visible now? Yes. Okay, any question about sensitivity analysis and scenario? Then maybe we shall pass just through the forecast, because we shall pass through the forecast of the pilot paper, so that because we've done some forecast here. So today we just wanted to focus on sensitivity analysis, scenario analysis, the goal-seek function, and forecasting, isn't it? So here we did here was the sensitivity analysis. Even this one was sensitivity analysis. 23, this one was the scenario analysis, the choose function. Also for 24, this one has been scenario analysis plus forecasting. So maybe we shall come back and do a cash flows and the rest. Some people are asking, so let me just be a little bit faster. So I'll start from part B. The cash flow statement, maybe we'll do it on Monday. Calculate and comment on the following key ratios: the revenue growth rate. So it's just like the same thing that we have done previously. We are just doing part C, which is the forecast. So we must start from here. So the revenue growth rate will be equals to, I'll open my brackets. So it will be the one in 2021 minus 2020. You close your brackets, divide by 2020, isn't it? Control enter, control backspace to jump to the active cell. So here is the percentage. So for 2021 and 2022, there are 2. Then we'll be asked of the 2-year cumulative average. So for the 2-year cumulative average, it will be equals average. You press tab and you select the 2, control enter, and maybe you add the decimal places. This one is the growth rates, isn't it? And this one is the cumulative average growth rate.